Hello, everyone. Welcome to Rural Classroom Live. I'm Albert Liu, here as usual with Rick Rule, and joining us today is Steve Barton, host of In It in Minutes. Steve, how are you?
I'm excellent. Albert, how are you doing?
I'm great. Thanks for joining us today. Rick, good to see you. How are you?
I'm fine, Albert. A pleasure to be back with you. I can tell by looking that I need to get you a Battle Bank shirt.
That's good. I will wear it proudly. I just want to let everyone know that we're just a few days away from Rick's annual symposium in Boca Raton. I'm on my way there as we speak. Rick and Steve will be joining in the not too distant future. So if you have not yet signed up, go to symposium.ruralclassroom.com for information about that. The whole program is offered via live stream. So even if you can't make it out to join us in Boca Raton, we'd love to have you join as an online guest. Rick, I'm just wondering, do you have any opening remarks for us today?
Giving me the opportunity to have a commercial for the conference is probably a mistake on your part, Albert, but I will take it. We've put on this conference for about 30 years. It's got a little better every year. You do something for 30 years, it gets a little bit every year. It gets pretty good. And it is, to say the least, pretty good. Great speakers, big picture thinkers, not failed pundits, not influencers, but rather people like David Stockman, who lived in the bureaucracies that they attacked. Daniela DiMartino Booth, Nomi Prinz, Jim Rickards, people in a biblical sense that speak from the belly of the beast, not as failed journalists or influencers. We move on to portfolio managers who've been active in natural resources and precious metals for 30 or 40 years, not youngsters who learned to spell uranium 4 years ago. All of our exhibitors are vetted. If we don't own them, they can't appear on the floor. Simple as that. The best guarantee of all, if you don't think you got your money's worth, we will give you your money back. One other thing to note, we've spent a lot of money, a lot of time, a lot of treasure on learning how to make this conference work for people remote. People from over 30 countries will view the conference via live stream from the comfort and convenience of their own home. We learned last year that people who couldn't attend the conference live or via live stream got real benefit buying the conference tapes. We sold a couple hundred of them. And as far as I know, we only had one refund request. So to the extent that you're considering not participating in the conference because you're unavailable next week, consider buying the tapes of the event. This information is timeless. July 7th through 11th, the Rural Natural Resources Symposium, Boca Raton, Florida, live, which would be my preference, or live stream if that's convenient, or even after the fact. Your satisfaction guaranteed or your money back. As an added attraction, Steve Barton and Albert Liu will be live in the flesh. Albert may be hiding up in his hotel room watching the conference from live stream, but he will be there from time to time, including on our trademark boat cruise. So come see us.
Rick will publish my room number in the program.
Yeah, you're married now, Albert. Let's move on a little bit. Let's do a little bit of education. We talked some time ago, Albert and Steve, 6 months ago perhaps, about the fact that the junior uranium market was hated and way, way, way oversold. About the fact that one of the best contrarian indicators was the fact that many young internet posters who had uranium as part of their internet handle were in fact capitulating and saying that publicly that they wished that they had never heard the word uranium. Those are wonderful circumstances. As a contrarian, particularly a contrarian speculator, you learn to love hate. That market was way, way, way oversold. And we talked to people about buying a basket of high quality uranium stocks or uranium or Cameco. And mercifully, thousands of people did, myself included, of course. I need to say that that hate is past. And that portion of my portfolio that I bought as a consequence of hate, which was about 25% of my total uranium portfolio, has now been sold. The reason to own those stocks went away. It was hate. And when the reason to own those stocks went away, I sold them. This is a trading position. I still have 75% of my uranium holdings, which I anticipate now holding for the 3 to 5 year time frame, as a consequence of a factor that we've talked about many times at the Rural Classroom, including in the Uranium Boot Camp, which is the fact that the key driver in the uranium market now is the emergence of a term market, coinciding with a supply shortage and coinciding with a worldwide boom in reactor construction. So the long-term thesis is very much intact. But I think it's important to note that there are trading opportunities in grossly oversold sectors, which uranium was. Most people try to buy in overbought scenarios. They get courage from the price action supporting their narrative. That's not the way you make money. You make money trading, buying oversold circumstances. And this was a classic opportunity to do that. I'm not saying after the fact anything. What I'm saying is use this as a method to gain more understanding of the way markets work and how you should respond to them. A classic circumstance, a 40 or 45% win in 6 months that was, from my point of view, effectively riskless. This will occur again, perhaps in uranium, perhaps in other sectors. Keep your eyes open for pervasive hate and massive sell-offs. They contain great opportunities. Now, Albert and Steve, I want to risk disaffecting a lot of our viewers by talking a little bit about politics, specifically the passage of the so-called big, beautiful bill. We will remember the earlier promises of Republicans and the president to deliver a smaller, more efficient government to pay down debt and reduce deficits. We remember in particular the promises of a more simple government. Those promises were met by a 1,000-page bill, hardly one of simplicity. We are met with a bill that projects the 4th largest budget deficit in history, but the projections are ridiculous because the spending provisions take place now while the savings provisions take place 3 or 4 years from now. We will have at our conference David Stockman. David Stockman lived this once before. He ran the Office of Management and Budget during the Reagan years. Reagan was elected, with a very broad mandate, not like Trump, a broad mandate to reduce the size of government. And David Stockman reveals in his book, The Triumph of Politics, how politicians on both sides of the aisle, Democrat and Republican, derailed the Reagan Revolution within 6 months of inauguration. The Trump promises have gone down in flames as well, at least the financial promises. This bill is an absolute travesty. I've talked before about the math of America, but just for fun, let's do it one more time in the context of this bill. The Internal Revenue Service suggests that the aggregate private net worth of Americans is $141 trillion. Whether that number is true, I don't know, but the IRS does make it their business to know about your net worth. From that $141 trillion, we subtract, the on-balance sheet liabilities of the U.S. federal government owed to bondholders, about $37 trillion. From that, we subtract the debts, the Fed's own balance sheet, which gives us a net federal debt of about $30 trillion. Then we subtract the net present value, not the nominal, the net present value of unfunded entitlement liabilities, Medicare, Medicaid, Social Security, federal pensions, military pension, that kind of thing. That's $100 trillion. And that, by the way, is a conservative estimate. So the headline math goes like this: 141 trillion minus 30 trillion minus 100 trillion. Pretty ugly number. $11 trillion remaining before state and local debt. But it gets worse. The deficit is projected to be at least $2 trillion a year. That's the on-balance sheet deficit. The off-balance sheet deficit, the net present value of unfunded liabilities, is expected to increase between $2 and $2.5 trillion a year. That means over 2 years, our aggregate liabilities at the federal level outpace our aggregate net worth at the private level. People say to me, Rick, it has been so for a long time. Why do I have to worry today? That reminds me of a great Hemingway quote, where they asked him how he went broke, making so much money writing books. He said, slowly at first, and then all of a sudden. I'm not suggesting that we're going to go broke, but I am suggesting that when people look back over 40 years and say, I've been hearing the same thing from your ilk for a very long time, if you transport yourself back to 1982, net debt as a percentage of gross domestic product was about 30%. Now, net debt as a percentage of gross domestic product is about 120. There is a mathematical, a statistical difference between debt at 30% of GDP and debt at 125% of GDP, 120% of GDP, pardon me. Taking ourselves back to 1982, the net present value of unfunded liabilities was about 90% of GDP. Now, the net present value of unfunded liabilities is about 4 times GDP. What has changed? The numbers have gotten worse, and the deterioration in the balance sheet is increasing rather than decreasing. All of that in the context of the big, beautiful bill. What does that have to do with a podcast around gold and natural resources? Well, my suspicion is that the only way to recover from the big, beautiful bill will be to reduce the purchasing power of the US dollar, which is to say, reduce the real negative net present value of unfunded liabilities while honoring the nominal liabilities by doing what the United States did in the decade of the 1970s, which is reducing the purchasing power of the US dollar in an absolute sense by 75%. That in the 1970s resulted in an increase in the gold price from an admittedly price-controlled $35 to $850, a 30-fold increase. I'm not suggesting we're going to see a 30-fold increase, but it wouldn't surprise me at all to see the nominal gold price mirror, in the opposite sense, the decline in the purchasing power of the US dollar. So please keep that in mind. With that, Albert, Steve, let's begin.
All right. Thank you for that, Steve. Rick. Steve, I just took me this long to figure out that Rick was saying that he didn't like my shirt.
I just saw the opportunity to spread my message, Albert.
All right, excellent. So I totally agree with you with this big bill, Rick. And this is what the government calls a balanced budget. Our assets balance their liabilities.
Only barely.
Barely.
Our assets balance their life.
Oh my gosh. All right. Rick, Steve, we got questions coming in. What do you see there that's good for Rick?
Okay, let's see, Rick. Alan is asking about, hi, Rick, are you currently long F3 uranium?
A small position in F3 uranium. This exploration team has been responsible for quite a few successes. They have an interesting hit, but it's too early to call a deposit. This is for the truly risk-tolerant investor.
Okay. Jay is asking, wants to know about Rudy Frank. Rudy Frank, please views on Seabridge and expectations of when it will be bought out.
I'm a Seabridge shareholder. Mercifully, I've been able to sell enough of my position that I have the rest for free. I call that the point of no concern. This is one of the largest undeveloped gold deposits in the world. Unfortunately, it high upfront capital costs and low grade. This is sort of the ultimate optionality play. Unlike optionality plays in the early 90s, which is one of the places I made my reputation, where optionality was free, this optionality comes with $1 billion price tag. So it's not for the faint of heart. Rudy is a very smart, very nice, very tenacious man. He has done a good job building an investor community. He has done a good job navigating the shoals of British Columbia politics, something I could never do. And he's done a good job in maintaining cordial relationships with the host First Nations. A wonderful human being with a very hard task. Yes, I'm long.
What they're going to need a big starter pit, right? Have they found that yet? Do they know where that's going to be so they can recoup some of this to get it going?
They have not. And when you say a big starter pit, they need a high grade starter pit. It's
Okay.
going to take at least $8 billion to turn this thing on. They have a sea of low grade gold, but what they need is something like Bob Quartermain found on the backside of the deposit, the Bruce Jack Fault, where you have 7 or 8 million high grade ounces so that you can recoup your capital early. They haven't yet found that. I'm highly confident it exists on the property. That geological endowment doesn't occur without some of it flowing into a place where there was sufficient rock preparation. However, they haven't found that yet, and they may not find it.
Okay. Okay. All right. Josh is asking, what did Rick think about the maiden drill results from the South Uchi project that Kenorland and Arivana Resources released yesterday?
I love it. There's no better indicator mineral for gold than gold. And the idea that they go into a sort of a frontier but pregnant belt and encounter fairly widespread gold mineralization, as and where they predicted, is a very good thing. It says a lot about Kennerland's success in using really advanced geological knowledge and very intelligent sampling techniques to stake large amounts of virgin or semi-virgin greenstone belts in the Abitibi, develop highly intelligent theses to test, programs to test the theses, sell these to industries, and then operate them well. Longtime Kennerland shareholders or longtime Kennerland followers will know that they enjoyed their first success in Quebec in conjunction with Sumitomo, which looks to me absolutely like a future mine. Will South Uchi be the second one? I don't know, but it's lovely to see the concept work as well as it has been.
Okay. He's also asking if you're a shareholder of, did I pronounce that right? Aranova Resources?
I am not. I'm not a fan of sole risk exploration. I would rather own the company that generates the knowledge base as opposed to a company that spends the capital base.
Okay. Andrew is asking, it was despised and abandoned, but has risen from the dead fairly dramatically. What do you think of Sibanye-Stillwater and its array of assets, including its retained stake in Aldebaran's Altar project?
I'm a big fan of the CEO of Sibanye-Stillwater, who I've known for 4 decades. Certainly, the higher platinum and palladium prices, dramatically higher, 40% higher, help Sibanye-Stillwater. The challenges I see is their continued operating base in South Africa and the continued instability around mining law and fiscal policy in South Africa. Sibanye-Stillwater and the rest of the South African mining industry have very little incentive to invest additional capital in the mining industry when important parts of the ruling government are looking to nationalize the industry. The consequence of that is that they're substituting labor for capital. The labor that they're substituting without the input of capital makes them highly inefficient, which means that they have to underpay them. The workers' wages have to go up, and the workers' wages can't go up because they can't deliver the efficiency. In a mining context, this is being stuck between a rock and a hard place. I do not own Sibanye-Stillwater, despite the fact that I think that, with the exception of the old Norilsk, now Nornickel, that it's the best platinum and palladium stock on the planet.
Okay. But the other one, you take risk with Russia.
I don't take that risk anymore. I felt it.
Okay, Conrad is asking, Rick, are you concerned because G Mining's environmental approval was not granted by June 30th? The timeline stated was Q2. Is this unusual?
Not unusual. Does it concern me? Yes. I don't know that host government particularly well. That host government has no need to steal. because they have enormous oil reserves. The government coffers are swelling faster than the government can spend them, an unusual circumstance on a global basis.
Mhm.
My preference would have been for that administrative bureaucracy to act on time. I don't understand the delay, and obviously you're nervous about things you don't understand.
Okay.
Hey,
All
Steve,
right.
can I
Yeah, there's
get
been a little
question in?
weakness in the share price. Maybe that's why.
Steve, can I get a question in for Rick here regarding the comment you made on Russia, Rick? As a former engineer, I relied heavily on checklists, and lessons from Ukraine is the stuff that checklists are made of. If you were going to add an entry, lesson from this ordeal, what would it be? What specifically would you be jotting down?
People, including governments, are substantially dumber than you yourself believe. As an investor, I didn't believe that the government of the United States was dumb enough to force the Russians to invade. I didn't believe that the Russians were dumb enough to invade. I made a whole bunch of suppositions about other people's intelligence that were unfounded. And as a consequence, I made a very stupid mistake myself. I don't know how I would avoid it. The Russian natural resource stocks were, by every measure, the cheapest major natural resource stocks in the world. I had invested in Russia extremely successfully going back to 1990, 20 something years, with wonderful results to the extent that a couple of my holdings paid me more in annual dividends than I paid for the stock. The stocks sold off because there were early warning signs, including from the Russians, that they felt that they had to take action. And thinking that the costs on all sides were too high, not to have a negotiated settlement, I didn't sell, much to my chagrin.
Yeah.
Will
Okay.
I do anything? I don't know, Albert. I honestly don't know.
I think the lesson that I take is that the realist school teaches that nation states act rationally, but everyone has their own rationality, and they don't necessarily conform.
I guess that's right. I realize that you could tell a politician's lying when their lips were moving. But in the accords between the West and Russia leading to the knockdown of the Iron Curtain, we told them specifically that there would be no eastward expansion of NATO and that there would be no interference by the West in the domestic political affairs of Eastern Bloc nations. We began to violate those accords within 6 months. I'm not suggesting that Putin was a saint, but many of Putin's actions can be explained by our own complete disregard for the treaties that we signed.
Yeah, makes sense. All right. Thanks for that, Rick.
Yeah, I got, I think, the quote of the day out of that: people in governments are dumber than you could possibly believe. That's a good one. Okay, Tillman has a question about the symposium. He says time schedule for next week's symposium program is in Florida time. Correct?
Yes, sir.
Okay, local time.
Eastern time.
Eastern time. Sergio is asking, what is Rick's opinion on the update guidance of Integra Resources for 2025 and potential to increase mine life of Florida Canyon?
I think the goals that they've set for the remainder of 2025 and 2026 are stretch goals. The gold price certainly helps them. The assumptions that they used were the prices that were in place at the time that they negotiated the acquisition. And so the financial goals might not be a stretch goals. The cost goals and the production goals may be a stretch goal. I think the probability of extending the reserve life at Florida Canyon is something like 100%. That mine has not seen very much inward investment and in fact was used as a cash cow by the former operator, which is why that operator had to sell it. And the Integra people are high quality explorationists and have decided that the old wisdom that the best place to look for gold is in the head frame of a gold mine is a good strategy. And I think the probability, particularly at this gold price, of finding more ounces and increasing the reserve life at Florida Canyon is 100%.
Okay. He's also asking, what is your current target for Integra Resources?
I don't do those anymore.
Okay.
I don't know. Higher.
Okay. And Geekmeister, I like the name there, is asking about tectonic metals.
I'm a small shareholder in Tectonic. I don't like sole risk exploration. I like Tony Retta, the CEO. I admired the past success where he was the number 3 person. I like the technical team. I'm no fan of sole risk exploration, but they have an interesting discovery. It may end up being economic. It may not be economic. I am a shareholder.
Okay. Jay wants to know about Aldebaran. Is it a potential 10-bagger?
From here, I mean, if you give me the word potential, like would or could or should, I can sell you anything. I think that people who speculate on Aldebaran now should say that if things go right and mineral prices don't increase dramatically, that they should buy buyout time, which might be 5 years from now, enjoy a triple. If you were focused on a triple and you got a 10-bagger, you'd be happy. If you were focused on a 10-bagger and you got a triple, you'd be mad. Why set yourself up to be mad?
Okay, well put. Aram, probably one of the more active guys in the classroom, is asking, what should be an optimal portfolio allocation size for names like Kenorland for aggressive investors who are ready to put in the needed hours of work?
If somebody is really willing to put in the time, Kenorland could easily be 10% of one's speculative portfolio. How much of their portfolio people want to allocate to speculation is a very, very different question, and there is no one size fits all to that. I would argue that most of Kenorland's market capitalization now can be explained away by their 4% NSR on Frotté, which means that you're getting the rest of the company's assets and a very formidable pool of intellectual capital, plus a lot of cash for free. That's a very good price. In exploration, you can go through those assets very, very, very quickly. They have thus far been extremely dedicated to the prospect generator business model, generating high quality projects at low cost, sampling them at very low cost, developing an exploration thesis, designing programs to test the thesis, and then bringing in third parties to test that thesis at no cost and no dilution to Kenorland. I'm willing to pay up for process with high quality people.
Okay. He also wants to know, what do you think is the most attractive Lundin stock right now?
For speculators, it would have to be fireweed because nobody cares. For investors, it would likely be either Marin, the old Africa Oil, which is selling at less than half my estimate of NAV, or International, which is now producing 60 or 70,000 barrels a day and actively distributing the proceeds to shareholders. That isn't to downplay the incredible success that they've enjoyed at NGEX. That success is beginning to be noticed. And that's an absolutely incredible success. 25 years in the making. I was excited enough when they were drilling 1,000-meter holes of 0.6% copper. But the more recent holes where they have hit that high-grade starter core, 6%, 8%, and now 14% copper, that changes the dynamic a lot.
14% copper?
If you add the whole suite of metals.
Okay. Wow. All right. Han wants to know, Rick, could you please comment on Equinox Gold after the merger? Is it now undervalued at current market cap of 4.4 billion?
I wouldn't suggest it's undervalued until they get hard rock to nameplate capacity. They have spent 1.4 billion of a 1.1 billion dollar budget bringing in a deposit in the Abitibi, and that deposit is not behaving well yet. They have the balance sheet trauma associated with that overrun and the big expenditure. The merger that they did was a good merger in the sense that while not strategic, it brings them a second development project, and it brings them simple heft, simple mass, which means that they will see equity inclusions. You will now, hopefully, see Equinox finish off the job in Ontario, which is to say, shake that mine out and get it at nameplate capacity. If that happens, the resultant cash flow will cure a lot of sin. Simultaneously, I think, having watched Ross Beatty now for 40 years, you will see them sell off a couple of their tier 2 assets. They don't need them for the story anymore. They don't need them for any purpose. Shore up the balance sheets and look for another big asset, another $1 billion or $2 billion mine build to grow. That's what Ross does. If you aren't prepared to wait through at least the process of them finishing off hard rock and hard rock enjoying a couple of quarters of nameplate production, you should sell the stock.
Okay, and by hard, you're talking about the greenstone, right? Yeah. Okay.
Yep.
What ranking do you give them?
I'm going out on a limb here. I'm betting they will do that, but I have them as a 4.
Okay. Okay. Michael wants to know, Rick, please comment on Entry Resources. Is it Entree?
Entree.
Entree.
Entree is a company that has a carried interest on the northern extension of the Oyu Tolgoi copper gold deposit in Mongolia, which I think is the 5th largest copper gold deposit currently producing in the world. It's important because it's a carried interest, and it's important too because the mining that Rio Tinto is doing now is drifting to the north, which is to say they will begin to enter Entree territory within a couple of years. Entree has no upfront capital costs. They have a carried working interest in this. Not as good as a royalty, but better than anything else. We have enjoyed, by we, I mean the people who were shareholders in the rural managed accounts, an incredible win in Entree. We got in it 5 years ago when literally nobody cared. And now the world's starting to care. I think it goes from here. I don't think it's suitable for people who want excitement in their portfolio. But for people who are content with mere profits, there's still money to be made.
Okay. Tybor wants to know, good afternoon, everyone. I'd like to get Rick's opinion on Orion Resources.
Orion has an interesting discovery, likely economic, in Finland. It is fairly close to an operating Agnico Eagle mine. A lot of people speculate that Orion will become a target of Agnico Eagle. I don't know what the exit strategy is. I don't own Orion, but I certainly am attracted to it.
Okay.
Hey, Steve, can I get a question in from the YouTube audience here? Louise is asking Rick, how does a younger investor with less capital take part in this ongoing bull market?
Well, that younger investor starts by joining the real classroom and increasing his or her knowledge of natural resource investments. A younger investor, too, should review the lessons in Introduction to Natural Resources so that they learn something about the market dynamic. In particular, the younger investor might want to pay attention to our discussions of the patterns that bull markets take, where, as an example, the gold bull market is led by gold. Eventually, as margins increase, goes to the best of the best, then goes to the rest of the rest down the quality trail, so that that investor can learn to take advantage of the changing dynamics of the market. The investor, too, should equip himself or herself, if they're going to be speculators, in adopting strenuously a contrarian outlook. looking for hate, looking for markets where there aren't competition, and selling markets that have matured. That same investor, beginning investor, irrespective of the amount of capital they have, needs to decide for themselves whether they want to be an investor or be a speculator. I can't tell them what to do. I can tell them that over the course of a decade, the results that can be obtained from chasing beta, which is to say, the amount by which a certain sector outperforms the broad market, can beat investors chasing alpha, trying to outperform the market. And so for certain investors, as an example, a gold portfolio that would consist of Franco-Nevada, Wheaton Precious, and Agnico Eagle, on a risk-adjusted basis, might outperform a more speculative market. It's important for the investor to decide who he or she is and pursue a strategy that will be comfortable to that investor over time.
Rick, I remember some years ago hearing Porter Stansberry give some advice to very young investors, but I thought it was excellent advice. And his advice was the first thing you have to do is you have to save. And he encouraged every person who wanted to get into investing to save. I forget what it was. I think it was maybe $50,000. But before you worry about doing any equity analysis or anything like that, go through that exercise, because the act of saving by itself is actually a useful skill and a critical prerequisite to becoming an investor or speculator. And to that, Rick, I would add maybe do some of that savings in gold, as in gold bullion. What are your thoughts on Porter's advice and then my amendment?
Advice. And for some young investors or would-be investors, they have revolving credit debt. If you have credit card debt at 22%, pay that off. That's an investment that yields you 22% compounded a year, guaranteed. That was a complete no-brainer. So yes, absolutely save, and save rigorously. Don't save at the end of the year. Save 10% at least of every paycheck pre-tax. I'm sorry. I, as you note, Albert, save in gold, and I maintain liquidity in U.S. dollars. Whether or not that is as comfortable for somebody else as it is for me is a different matter. But my belief in the future is that the purchasing power of U.S. dollars will decline by 75%, while the purchasing power of gold will at least stay constant.
Another one I like too is the tax advantaged accounts. At least like in America, we got the Roth IRA that once you get it in there, and you paid your taxes up front, and after that, Uncle Sam can't touch it, and so you can buy and sell these stocks without having to worry about capital gains tax and have I had it a year or not. And once you get enough in there, you can even buy rental properties. Okay, Guillermo is asking, on the topic of rare earths, does Rick follow Lindian Resources? They have a large rare earths carbonate hosted deposit in Malawi.
I do not. I know who they are, but I don't follow them.
Okay. Han is asking, hi, Rick, could you please comment on Centaurus Metals now drilling for copper and iron ore? Is this value added to the company or a possible distraction?
I don't think it's a distraction. Where they are in Carajás is a known iron oxide copper gold district. I think they're looking at the success that Bravo enjoyed by following up some magnetic anomalies, and in addition to having their own ultramafic reef, drilling what may be an IOCG discovery. To the extent that they aren't successful in turning those mag signatures into discoveries, then they need to get back to doing what they're doing. But if they discover an IOCG like Salobo, which is an absolutely epic IOCG in that district, you've really changed the nature of the company. So I haven't seen the geophysics that they used to vector in on that exploration, but I'm not unsupportive of the effort.
Okay. What ranking do you have Centaurus at now?
I have Centaurus as a 4 with absolutely no regard to the IOCG exploration.
Okay. And Tia is asking, Rick, what are your thoughts and ranking of Devon Energy considering they do not have a deep inventory?
I have Devon as a 4. I think that, I mean, the U.S. natural gas market is nowhere near as cheap, Steve, as when you and I talked about it 2 years ago when I discussed it as free. uh, uh, Devon does not have a great inventory, but they're enjoying spectacular free cash flow and very, very, very good fiscal discipline. Devon and Equitable are excellent ways to play the continued rebound in the U.S. natural gas business. The long period of very low prices that we had in natural gas attracted a lot of investment, particularly among European firms that were consuming natural gas, which was no longer available in Europe, reshoring in the United States. But it also ushered in a lot of investments in gas storage, gas transmission, and liquefied natural gas places. The cure for low prices was, in fact, low prices. And Devon is now in a position to capitalize on the rebound of natural gas.
Okay. And Josh wants to know, what does Rick think about Probe Gold?
I don't have an opinion on Probe. That's one that, in conjunction with my former colleagues at SCP, we're looking at.
Okay. Helen, what's up, Helen? Look forward to seeing you at the symposium. Helen is saying, is Rick still interested in Chalice mining?
I am. I'm not as attracted to Chalice as I am Centaurus, merely because Centaurus grades are so much higher. Chalice is a big deposit headed by a very good guy, and it's extremely well located, basically in suburban Perth. What mitigates against it is grade. I'm attracted to the whole sulfide nickel business, but I suspect that a turnaround in sulfide nickel is perhaps 3 years away. So somebody who wanted to follow me into that trade is somebody that would have to be very, very patient.
Okay. Majid is, this is kind of a follow-up question here, I guess, talking about pensions. Every beneficiary from a pension, there are 3 payers. Pension is a Ponzi scheme, isn't it? Unfunded but payable? Maybe he's talking about Social Security. I'm not sure.
Yeah, that depends on the nature of the pension. There are some private pensions that are defined contribution rather than defined benefit plans that are overfunded. It's really a function of each individual pension. There is no one size fits all. I would urge anybody listening to this call who is counting on receiving pension income to pay attention to the financial structure of their pension plan. Defined benefit plans are a promise to pay. They're very much like entitlements. As we discussed at the beginning of this call, the net present value of unfunded federal government promises exceeds $100 trillion. I'm afraid that description probably applies to many underfunded private pensions too. You may recall the General Motors pension or California state teachers' pensions. There are a lot of pension plans in the United States that, despite their promises, are way, way, way underwater.
Yeah. CalPERS might be another one there. Does Rick have a ranking for Bellevue Gold?
Going out on a limb, the share price decline in Bellevue has caused me to upgrade Bellevue all the way from a 6 to a 4.
Okay. How about Resolute Mining?
I don't have a ranking on Resolute currently.
Okay. Desmond via YouTube wants to know, hi, Rick, what do you think is the potential for Cerro de Pasco Resources? Could it be a 10-bagger?
If you give me the worst use of the word could, of course. Cerro de Pasco is a very, very large silver deposit in tailings. It has the benefit of having already been mined and crushed. The processing facility is not owned or built. We don't understand yet the composite metallurgy of the tailings, nor do we even understand the aggregate size of the tails. The estimates currently are about 400 million ounces. Highly, highly, highly leveraged silver deposit. Lots can go wrong, between now and the time it's monetized, but lots can go right too. Make no mistake, I've been through enough silver bull markets in my life. This will be my fourth, that I want to be part of this one. And so I own some Cerro de Pasco because of the leverage to higher silver prices. If I'm wrong about the silver price, if they run into processing hiccups, as an example, are unable to buy the Volcan mill there at Cerro de Pasco or unable to construct their own, if they run into sociological challenges or if they run into processing and technology challenges, there's a lot that can go wrong. But there's a lot that can go right. An indicated 400 million ounce resource in one place that you can mine with a dredge would be extremely attractive in the right silver price environment if they can solve the technological challenges.
Which would be less risky, Cerro de Pasco or Argenta? Be Cerro de Pasco, right? Because they've already
Probably Cerro de Pasco, because you don't have to explore for anything.
yeah.
You just have to figure out what you have and how to make it economic.
Okay. Geek Meister wants to know about West Red Lake Gold.
I own some West Red Lake. I'm going to watch what they do right now very, very carefully. They are moving that deposit into production without a third-party bankable feasibility study. I've seen this work about 3 times in my life. I don't like it. The former operator drilled on centers that were not tight enough. These guys have done a good job drilling it down on tighter centers. They have the advantage of buying the deposit very cheaply and buying the process facility very cheaply. They put a lot of money in the deposit. They will make a very vigorous case for what they're doing at the Rural Natural Resources Investment Symposium next week in response to questions from me and others. Note that I own it, despite my concerns.
Okay. Mike wants to know, why did Oceana Gold consolidate 3 shares down to 1?
Very low prices are inefficient for buyers and sellers. A 4-penny spread on a $2 stock and a $4 spread on a $12 stock means that the buyers and sellers of the $12 stock get a much better deal in transaction costs than the small ones. The higher share counts and the inefficient trades are an accepted part of the Australian market. But institutional buyers in the United States on the New York Stock Exchange would prefer higher share prices and tighter spreads.
Why do all Aussie stocks have like billions of shares? Do you know why that is?
Yeah, I think because the odd spreads. If they can quote a stock a penny by 1.1 penny, what that means is that they're making 8% on the buy-sell spread. If that same stock is $1 by $1.02, there's a 2% spread. Which would you prefer, an 8% spread or a 2% spread if you put yourself in the dealer's shoes?
Okay. Let's see.
I think, Steve, that's all we have time for today.
Okay.
Yeah, so let's go into our closing message, Rick. There's something about the symposium that we haven't spoken about yet, Rick, and it's coming up, so I want to get this in. You've introduced a new panel this year. That's Investing Legends. And I know you're someone who's benefited a lot, especially in your early career, just by rubbing elbows with some of these investing legends. And so if you are a young investor and you know, what would you look to take out of, I guess, that part of the program?
Well, as you point out, we've done living legends, people who have built multi-billion-dollar companies from scratch. We've done that for years. And it's the attendees' favorite feature at the conference. Partially as a consequence, Albert, of my interaction with the audience at the Rural Symposium, I decided that we needed to allow the audience to avail themselves of the expertise of some people who have been investors as opposed to company builders, the Jonathan Goodmans, the Frank Giustras, the John Hathaways of the world. so that they can tell you how they survived fat markets, skinny market, up markets, down markets, how they deal with things like volatility, patience, position sizing, trading. There's a whole bunch of technique involved in both investment and speculation that the panelists have all experienced over 4 decades in the business. And my hope is that this knowledge will be as available to my audience as the knowledge that has been shared by the living legends has been available to my audience for 20 or 25 years. I'm very excited about this.
All right, I'm looking forward to that too. So that's July 7th through 11th. Go to symposium.ruleclassroom.com for details. We'll see you there next week. Rick, I will be on the floor. I didn't realize I was going to give myself a bad reputation by disclosing how much I enjoy the live stream. I'll be on the floor with everyone else, especially during the breaks, and because that's when I get to interact with the sponsors and the other speakers and attendees. So check it out. We hope to see you there. Steve, thanks for joining us this week, impromptu and live stream. Always great to have you. And I'll see you also in Boca Raton next week.
Yes, look forward to seeing you guys and anyone else that's going to be out there. Be sure to come out and say, hey, I'll have the booth set up.
All right.
And
Take
so
care,
all
guys.
can say hi to us.